Good morning and welcome to Stock Market Today. It's Friday, December 13th. Friday the 13th for those of you who are superstitious. Welcome to Stock Market Today. This is Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Get daily stock ideas for you to consider. It hits your inbox every trading day before the market opens. So U.S. equities finished higher in Thursday's trading near the best levels of the day. The Dow, S&P, and NASDAQ all hit intraday record highs on the heels of bullish trade news between the U.S. and China. Financials and energy were the best performers. Defensive sectors lagged, as you would expect in a risk-on rally. Treasuries came under pressure with the curve steepening. The dollar was stronger against the yen. Little changed on the euro cross. Gold down 20 basis points. WTI crude up 70 basis points on the day. As we get to the desk this morning, we're getting some follow-through. Futures up about 40 basis points after we traded to records yesterday. Asian markets rallied overnight, led by Hong Kong, Japan, and China. European markets are strong as well. Treasuries are mostly stronger with the curve steepening. Dollar stronger on the yen, lagging on the euro. Gold up 20 bips. WTI crude adding on 1.3%. So yesterday's activity gave us a near-term break of resistance on that bullish trade commentary. Near-term support moves up from 30.30 to 30.50 to 30.50 to 3100. The break from the trading range continues to target 3200. That is our long-standing upside target for this year, and that remains in place. RSI is in bullish ranges, and Chaikin money flow is bullish, so the indicators are confirming the price activity that we are seeing. We have been talking for some time that the odds favor a continuation higher into the end of the year. All of the evidence was pointed in that direction. The odds favored it, and so far it's playing out. We continue to see scope for a move to 3,200. We continue to use pullbacks and consolidations as opportunities to add leading stocks in leading areas of the market to the bullish side of the portfolio, and we continue to feel that that is the right strategy into the end of the year. Now, taking a look now at our market in a minute, what are we writing about in our note to Chaikin Analytics clients today? Risk on rally on reports of the signing of the phase one of the trade deal. Relative strength in semiconductors gains steam. We're going to look at that chart. I spent a lot of time on various media outlets yesterday in New York City talking about this theme. High beta versus low volatility confirms increased risk-taking in the marketplace. Pharma stocks become leadership in the healthcare sector, and futures, as I said, are pointing to a higher open here today. Let's take a look at the power bars now. Major averages. Dow still skewed in favor of the bears, 7 to 5 after the 80 basis points rally yesterday. S&P 500 up 84 basis points, 123 bulls, 83 bears. NASDAQ slight underperformer, actually. It's a little bit surprising. 26 bulls to 15 bears. Small caps inline performers still skewed heavily in favor of the bulls. 728 to 250. Remember what we've been talking about, small cap breakout. I even showed you the micro caps on Wednesday. Risk on assets are moving in concert with the broader market. Bonds downtick, sending yields higher. Fins, because of this move in bonds, Fins had a great day yesterday, up nearly 2%, 34 to 3 bulls to bears in the financials. It's an area of the market we've been talking about a lot lately, right? How many times over the past month and a half have you heard me talk about financial outperformance, rising rates, banks? The theme has been there, and now those who have followed that theme are getting paid. According to the Power Bar, small cap stocks and large cap stocks are bullish. The major markets are mixed. Let's take a look at the stock of the day now. Stock of the day is TriPoint Group. This is a household durable, more like a home builder, if you will. Closed at 1570. Builders were under pressure yesterday as rates moved higher. Chaikin Power Gauge rating for TriPoint, however, is very bullish due to very attractive financial metrics, very strong price volume activity, strong earnings performance, and positive expert activity. TPH, very bullish rating based on the 20 factors, 5 in each of these 4 categories. Strong trend, strong industry group. Market and model are in agreement here as that very bullish rating is met with a stock that's outperforming. Chaikin money flow is bullish. The trend is up. Only real issue I see with TriPoint here in the near term is that it's overbought. We want this setup, but with oversold stocks. We want TriPoint down here at 15, on its way to 16 in the near term. We want TriPoint down here at 14.5, on its way to 16 in the near term. We want oversold. Buy bullish rating, outperforming, bullish money flow becomes oversold. When stocks become oversold within the context of an uptrend, especially if they are bullish and outperforming, that is your setup and that is your opportunity. Let's look at the sector tracker now. The movement of the major sectors over the last 5 days points to the bigger picture cyclical rotation that you've heard me talk about for the past month and a half every Tuesday, right? On Tuesdays when we do our relative strength work, we've been talking about the cyclical rotation, and we've been saying that in the near term, the rally in defensives looks counter trend and the cyclicals were likely to reassert. That's what we've been writing in our notes. That's what we've been talking about. And that's largely playing out. Energy at the top of the list, still bearish of the fundamentals in energy, but benefiting from the cyclical rotation. You've heard us talk about the fins a lot. There they are. Number 2 on this list over the past 5 days. Tech, another area that we've been talking about. Materials, industrials, cyclical areas of the market that are doing well. This is all playing out within the context of yields going higher. This is all playing out within the context of that shift from growth to value that you've heard us talk about. Right? This is why we look at those data points, because it has impacts for the equity market. REITs and utilities, only 2 groups lower over the past 5 days. Staples towards the bottom of the list as well. There's your defensives, right? Risk on rally favoring the cyclicals. Remember, the market has marched higher this year on the back of the defensives, right? On the back of the staples, the utilities, and the REITs. Now we're getting a rotation into the risk-on areas of the market that seem to be propelling the next leg of the drive higher. I think we want to pay attention. We've been talking about that rotation for quite some time. We've been saying that we no longer liked areas like utilities and real estate, and we want to rotate into areas like financials, like healthcare, and tech. We've remained bullish on the entire way. Our industry in focus today, speaking of materials, mining services over the past 6 months, it's been a slight underperformer, lagging the S&P 500 by 28 basis points. However, its power bar ratio, which measures future potential, is very strong. 10 bullish or very bullish stocks based on the Chaikin power gauge rating for only 2 bearish or very bearish stocks, and it's currently ranked number 4 of 21 subsectors. It's moved down. It's moved up, rather. I apologize. Up 3 slots over the past week. RS, Reliance Steel, very bullish rating. Commercial Metals, CMC, very bullish rating. And Consol Energy, CEIX, all with very bullish Chaikin power gauge ratings in an area of the market that we now want to pay attention to. Why? The personality change that's playing out. We'll talk about it. XME is the metals and mining ETF. It has a bullish Chaikin power gauge ETF rating, and it's in a strong trend above the rising long-term trend line for you breakout traders in classical charting. 29 was a resistance level that was broken on Wednesday and followed through on Thursday. Money flow, bullish. Here's the personality change. Rating goes from bearish and neutral to bullish. All the while, relative strength is improving to the point where XME is now outperforming. We want to start paying attention to the metals and mining area of the market. We didn't want to pay attention to it when it was bearish or neutral and underperforming. We want to pay attention to it now. Here's 3 stocks to start to look at. There are 7 others with bullish or very bullish Chaikin power gauge ratings. If you trade the ATF, I think XME looks interesting. If you want to trade the stocks, you have 10 to start to think about. Let's look at what's trending now. Yesterday's S&P 500 gainers and losers are movers and shakers. WIN, WYNN, up 9.5%. China trade commentary helping that one. All the Macau gaming stocks moved higher yesterday. AMD, the chips ripped yesterday. Best performer in tech. Semiconductors. AMD goes along for the ride, up nearly 8%. That's China related. L Brands, China trade comment related, up nearly 7%. 6.76%. L Brands now a neutral stock here at Chaikin Analytics, and it's begun to move higher. Western Digital, I didn't see any real news there to drive that stock higher by 5.2%. But Tech is an area of the market that we like. And Gap, GPS remains with a bearish rating, but the trade commentary obviously helping the retailers. Sends Gap higher by 5.2% on the day. Loser side of the board, that spike in yields weighed on the REITs. SBAC, very bearish stock, down 3.27%. Real estate stock lower on the day. REG, another real estate stock, lower on the day with the rest of the REITs, but this one had the added disadvantage of catching a downgrade at Citigroup. I told you the home builders came under pressure yesterday. I think that's largely a function of the backup in yields. Lennar and DHI, bullish and very bullish Chaikin power gauge ratings respectively, down 2.75%. Facebook, federal regulators are talking about an injunction due to antitrust issues about how their information across their product lines is used. Facebook down 2.72% yesterday. Let's talk about the charts. Semis gain relative steam to the upside. Here's the SMH, the chart you know well, the chart you love, the chart you're paying attention to guide your views on the market. Well, if you've been paying attention to it and you've been using it to guide your views on the market, you've been coming away bullish just like we have. SMH, Van Eck Vector Semiconductor ETF relative to the S&P 500. Solid uptrend, breaking to new highs yesterday. Above the 200-day moving average as the semis continue to outperform the market in a move that is confirmed by momentum. What does that mean? Well, the 14-period RSI is holding in bullish ranges. Notice that on pullbacks, the RSI doesn't get much below 50, stays above 40, indicating that momentum remains bullish for the relative relationship, which is really what we're concerned with. When semis are outperforming, that's a bullish sign for the market. Obviously, they're outperforming. They're moving higher on an absolute basis to new highs. But what's interesting is they tend to lead and lag. Remember, the market bottomed on Christmas Eve last year. Look at when this relationship bottomed, back in late October, early November, and started to move higher. They lead and lag on both tops and bottoms. We don't have a top yet, not as far as I can see. Stands to reason that the market is going to continue to move higher. Is that guaranteed to happen? No. But between what we're seeing with the Chaikin power gauge rating, right, the bullish ratio in SPY, and data points such as this, odds are market's going to continue to move higher. And the reason we think it's going to be led by more risk-taking and more risk-type assets rather than the defensives that really were leading throughout the year was, number one, if we look at the defensive areas like REITs and utilities, they're now underperforming the market with bearish ratios as it relates to power gauge ratings. But look at a ratio like high beta to low volatility. SPHB high beta relative to SPLV, the low volatility ETF, has broken a downtrend line, has broken above the 200-day moving average. When high beta is outperforming low volatility in the marketplace, that is a sign that investors are showing an increased willingness to take on risk. This is all coinciding with rates moving higher, with the growth to value shift, with the shift from defensives to cyclicals. All the data points continue to point in that direction. We're getting cyclical leadership to the upside now. The rotation is taking place. If you're still looking for opportunities in the REITs and utilities, you need to start skewing your analysis. One of the areas of the market that we're starting to like again has been healthcare. We've talked about it numerous times. We've looked at healthcare services. We've looked at healthcare bigger picture. We've even looked at biotech. Now we're taking a look at pharma. Look at XPH. This is XPH on its own. XPH, the pharmaceutical ETF, breaking topside through resistance after taking out the 200-day moving average, which has shifted from declining to flat. All the while, the RSI is putting in a series of higher lows as it shifts to bullish ranges. So momentum again. Momentum confirming this move higher in the pharma stocks as pharma stocks begin to outperform. We've broken the downtrend line relative to the SPY, and pharma is now outperforming. If I look at it within Chaikin Analytics, which I'm doing in my note today, I can see that the bull-bear ratio is positive, and we're highlighting a stock like Jazz, J-A-Z-Z. I hope everybody has a great weekend. Happy Friday the 13th. I'll be back Monday.